what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen.
Bitcoin bull Michael Saylor provides us an update on the recent market shift and the currency's most recent crashes. He also discusses the causes of shifting cryptocurrency prices and the future of the Bitcoin ecosystem. According to the CEO of Microstrategy, Bitcoin has been negatively impacted by vulnerabilities and other assets in a market that is largely unregulated. Saylor has been under fire many times in the past few months over falling prices, volatility, and uncertainty. He says that until Bitcoin gets to the $3,000 price point, there's no cause for concern. Please watch till the end of the video to hear Saylor's outlook for this year. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The facts of the matter are, on August 10th of 2020, we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the Nasdaq's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Now, if you look at what we could have done, we could have competed with the enterprise software companies in our industry. The best performing enterprise software company in that time period is Oracle. Oracle's up 39%. MicroStrategy's up 166%. IBM's up 2%. Salesforce is down 4%. SAP's down 40%. We're definitely not losing. Now, if you want to compare us to the best companies on earth, the strongest companies on earth that are more powerful than governments would be Google, Apple, and Microsoft. Those three big tech companies are up 58%, 46%, and 34% respectively. Amazon down 11, Facebook down 35, Netflix down 52. MicroStrategy up 167%. And one last factoid, out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P.
Saylor goes on to say that big banks are currently unable to issue stablecoins because they're unregistered securities, which puts a twist in the industry, but once licensed, will create a giant on-ramp in market capital. It would allow for tens of millions of transactions per day, which would provide massive potential for the crypto and stock markets. Let's listen to Saylor as he discusses the recent news surrounding Bitcoin and the developments with the Secretary of the Treasury pushing for adoption as we speak.
I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day. The open interest and the options have exploded. The stock, has exploded up, exploded down, exploded up. It moves all around, just like Bitcoin, which has gone through almost 3 cycles in the past 2 years. So I would say, to summarize, conventional critics and conventional mainstream analysts, they don't get the crypto economy, they don't understand Bitcoin, and they hate volatility. And those are the people that would tell you, take all your money, put it in a bank account yielding 1% interest and just don't lose it and don't bother us. But when we embraced the Bitcoin strategy, we did it because we knew that if we held our cash in a bank account, it was going to lose 20% of its purchasing power per year. And it has, as predicted. The money supply expanded by 40%. Single-family homes in the U.S. have increased in price 40%. If you had $500 million, it would have bought you the 40% less today than it would have bought you 2 years ago. So we had to do something for our shareholders at the time, and that something was buy high-quality digital property, and our choice was we could suffer a non-volatile slow death, or we could get on a bumpy lifeboat, a big orange lifeboat, the Bitcoin lifeboat, and we're going to get tossed around in the ocean, but we're going to float, and we're going to appreciate over time. And when I started buying this stuff, Bitcoin was $9,000, $10,000 a coin, and we've just been consistently accumulating Bitcoin. We have not sold any Bitcoin. And if you're a short time horizon person and you want to look at making a trade in the past 3 months or 6 months, just about everything you could have bought in the world in the past 6 months is a losing trade if you have a short enough time frame. But if you have a 2-year time frame, Bitcoin's winning. It's winning over 4 years. It's winning over 6 years. It's winning over 8 years. And I just like to be in business more than 2 years from now. I think that the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. If we're talking about what's caused the crypto crash, I think that it was triggered first by the interest rates, right? The tightening of the Fed. And that put pressure on all risk assets from the beginning of the year. And I think the next catalyst was the Terra Luna meltdown, because in essence, they had $50 billion worth of Luna and UST backed by $1 billion or $2 billion of real assets. So that was very unstable, and that algorithmic stable coin was just an accident waiting to happen. It's almost like they borrowed $20 billion and agreed to pay 20% interest on it. And they were going to issue equity to pay the interest. So they're going to issue Luna in order to pay 20% interest on UST through that protocol. And that was an accident waiting to happen. There's no way that was sustainable. So that melted down a lot of the cryptos and resulted in the unwinding of the Three Arrows, Voyager, and Celsius bets. And I think a lot of people took a lot of inappropriate risk, right? The cryptos were unregistered securities, but then loaning out hundreds of millions of dollars without collateral or under collateralized loans amongst the crypto hedge funds, that created a margin call run. And so they ended up becoming forced sellers and liquidating positions in a panic. And that took us all the way to 30,000. And I think the Celsius thing was the straw that broke the camel's back, where Celsius just completely unwound. And you had a whole set of panicked liquidations as counterparties seized assets and seized collateral and sold it at the market. So that's what takes the market down. And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now.
MicroStrategy still holds a significant amount of uncollateralized Bitcoin, which they could liquidate if there is significant downward volatility. MicroStrategy and Tesla have both invested billions of dollars in Bitcoin thus far, but Bitcoin, like any new technology, is still in its infancy, so we should expect some bumps along the way until it becomes widely accepted. Saylor says that you must have the trust of your shareholders if you want to run a publicly traded firm, and being trustworthy entails being dependable and implementing what you say you'll do. Saylor understands the value of having a reliable digital asset, and he plans to demonstrate why Bitcoin is the market leader today and why MicroStrategy will never stop buying. What do you think about Saylor's outlook for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.